Welcome back. You're watching Stock Picks, and here to unpack HomeChoice, Rex, Trueform and Novus is Financial Mail's Marc Hassenfus. Marc, always a pleasure. Good afternoon to you.
Good to be here. Thank you.
Brilliant. Marc, before we get into the counters, I believe they all have one thing in common. Let's talk about that.
Yeah, look, this is probably quite an obscure choice, but it's companies that have transformed themselves into completely different beasts. Now, this probably happens more commonly on the JSE than people realize, but I suppose the most famous example being Naspers. It was a media company, certainly not a media company anymore as far as I'm concerned. Maybe a little bit with Sibanye, originally a gold company, now seen more as a platinum play, or I suppose might even transform even further into a green metals play, who knows. So the companies change. They don't always get it right. Just a couple of examples. We've seen Labatt try and move into, well, Labatt has had various iterations, but the latest one moving into cannabis, not quite working out. It's taking a long time. Ellie's tried to move into renewable energy or batteries or generators. That didn't work out as we saw either. So it doesn't always work. And most of the time it probably doesn't. It's difficult just to change direction midstream. But some companies get it right. And I think the three companies we're talking about today are kind of at an interesting juncture in that transformation process.
Let's talk about the first one. I think very close to many of our hearts is certainly HomeChoice. That's certainly a company that we remember back in the day with the little booklets that may have been carried around, but now is a complete fintech player.
Yeah, so it's amazing because I think of my grandmother and buying blankets and things, catalog buying. It's a hell of an old business. It's very old school. And here's this business now on the cutting edge of fintech. I mean, the retail part of the business, which is always a fairly decent business. It was actually listed back in the JSE in the late 90s. It had a very checkered career there, very controversial delisting. But it's come back in a different form with this financial service application, which initially was an interesting sideline, quite big. Now it's dominant. It's now taken over. And in fact, it begs the question, what do they do with the catalog business? Or the retail business, although everything has been built off that, because you've got a client base, they pay their track record in terms of payments. When you lend money, which is their main business now, they know their clients very, very well. And bad debts have been so far, touch wood, pretty well managed, but growing very quickly and very, very impressive.
One that always surprises me, Marc, and I think HomeChoice really playing into this, is just how profitable selling credit is. It doesn't matter, who you are. If you sell credit, you could even be a loan shark in a corner somewhere. Selling credit is something that's really lucrative in South Africa.
Yeah, I've tried the same model with my children in pocket money, but they didn't go for it. No, you're absolutely right. But so loans, and it is a dangerous business. We've seen in the past. You go back to the small banking crisis. Lots of micro lenders came on board, then overextended themselves. It's a balance. It's difficult. Yes, you can make money, but there's a time where things are going to be managed properly and things turn, especially in the economy. And then you've got a problem with repayments, you've got bad debts, and you sink under a weight. So as I said, they do it quite well. And I think, let me just check my notes here. I think loan disbursements were something like 4.8 billion. It's big. It's a big company. But now the interesting angle is they've got this thing called buy now, pay later, which is, I suppose it goes back to another old thing we probably remember is like the lay-by, which I remember as growing up in a small town as a kid. If you wanted a pair of jeans badly, you'd go put them on lay-by. This is a bit different. Is that you can actually buy now and pay later. So it has the buy-in from the retailers, and I think most of the risk is carried by the retailers, and that is going great guns. I mean, they have doubled their gross merchant value. I think it was from 750 to 1.5 billion. So that is going great guns. And I suppose whenever you say something like this, you say things are going well, you maybe just want to take a step back and just try and reflect on it, because it might be going too well, too fast, too quickly. So that's the one thing to watch at HomeChoice, how well they're managing things and if they're keeping a lid on controls.
I also want to just, before we move away from this one, also just speak about, fintechs in South Africa. We seem to have a lot of little ones, but very few of them can say that they're linked to the JSE, listed in the traditional form. And that's something that HomeChoice might be able to enjoy in the future. Might a renaming of the company to sound more fintechy and more with it in the future, Marc, benefit this business?
Yeah, I think the HomeChoice name is, excuse the pun, quite homely. Yeah. They probably would look at change. And I suppose the other thing is that most fintech businesses that just dodge the JSE. They go get angel funders, go straight to private equity or to a bigger market like the Nasdaq. It's quite nice to have these guys here, but I suspect in the future they must consider international listing. I guess that would be maybe a little bit like Lusaka has done, the old Net One, look for something on the New York Stock Exchange, try and get some recognition, because I don't think we always have those same valuations in the JSE that the foreign markets have on fintech, where the multiples are quite heady.
We'll be watching this one very closely, a very interesting business. Let's talk about Rex Trueform. That's also a very interesting business. I'm keen to just get the history here, what it started out as versus what we see today.
Look, what it started out as I think it was in the 40s, late 40s, by the Shub family. It was a clothing manufacturer, and up to the mid 80s, maybe even a bit beyond, the JSE had. You'd be surprised how many clothing manufacturers were listed. I mean, it could have been as many as 40. They were all over the place. It was a good business. Then we had the influx of imports that could not be stopped, and margins got threadbare, and to the extent that they couldn't make money. And I think the last man standing was Sirdell back in the day, which HCI had to rescue. They were quite clever, or maybe fortunate. They opened a factory shop, which they sold their clothing at on a retail basis. Proved such a success, they decided to roll out another one. And before you know it, you had the Queen's Park chain, which now stands, not huge compared to the big guys, Foschini and others, and Trueworths, but it's a nice little niche, and it makes money more often than it doesn't. It has some ups and downs, and it actually, to be honest, it seems to be out of sync with the mainstream retailers. It's often slightly different in terms of performance, but that's provided a huge underpin. So they've become a retail business. But a couple of years ago, maybe 10 years ago, Marcel Golding of HCI, he came in and took control of Rex Trueform. Now we're seeing another transformation into a broader investment company using the cash flows from the clothing business. And they've made not a lot of acquisitions. I mean, property they've just built on the existing portfolio, but they've certainly looked at water infrastructure and, more interestingly, media. And you've got to remember that Marcel Golding was in charge of ETV at HCI when he was still at HCI. So he knows the business. And they bought a little media business called Telemedia, which I find might be one to watch. They've got some interesting applications.
I must just actually ask you about that property portfolio, because being an industrial property in Cape Town at this point is actually a great spot to see. We see many of our commercial property companies really looking for property in that space and really enjoying it as a municipality to work under.
Yeah, look, they also in a very nice, I suppose, what it's called now, a very fashionable node. It wasn't always fashionable, but Salt River, they've got a lot of properties there. Obviously, their head office is there and their factories are there. Golding has got other property interests. The old Texton, as you'll remember, he's controlling shoulder in that business. I forget the name now of that company, but there are all kinds of optionality there, I guess, in terms of building out the property portfolio. I think the property portfolio will just be a staid kind of business in there. It is what it is. I do believe that the media side is probably the one to watch. I think things could happen there. I don't think they'll happen too fast because they've been quite conservative. They've stopped dividends, which they've always paid. So it's obviously they're quite circumspect about expanding. But I think there could be some interesting stuff happening. I'll just give you one example. Is one of the applications I find fascinating is a A1 automated broadcast system for sporting events. So that means school sports, local leagues. God forbid they ever film me playing my club championships at tennis. That would be a disaster. But it's interesting how those local leagues in soccer, rugby, etc., cricket, school sport especially, people are quite rabid about it. And that could have a lovely application. It's probably cost effective, and more people might subscribe to it and buy into it. And that could be a very good little business.
We'll be watching this one very, very closely. Just with that, a broadcast media, Marc, I'm keen to get your thoughts on the transformation of this specific sector in South Africa. What we are seeing now, I know there's an inquiry happening with the Competition Commission where we're just trying to figure out where all the revenues have gone in broadcast media. There's not a risk at all for, for a company like Rex Trueform and just the sector as a whole.
Yeah, look, I'm not sure about the commission. I think, what that's going to uncover. But, I suppose what's happening is we've lost sight of a lot of the broadcasts. We have the SABC in mind all the time. A lot of the big broadcast groups that used to be listed, like Prime Media, Kagiso, have disappeared. So, but they're still there and they're still operating nicely. E-media is still, operating and doing very well. That's another thing, is that it's amazing how well they are doing compared to, say, an SABC. So be interesting to see what gets uncovered and what conclusions are drawn. But I think it's still quite a dynamic space. And I mean, I'm surprised, people haven't come to the JSE with these assets. The AME stayed listed, for instance, and it's done very well. It's actually been a good performer, and so is eMedia. Pays good dividends, and despite all the capital expenditure they had on OpenView. So it's an interesting space.
And then let's touch on Novus and the story of this business.
Yeah, well, Novus is the old Paul Media. Us old journalists will, remember it as being the big print business for mainly Naspers. It's still printing. It's not big in printing anymore. But we in the business, we know the printing is diminished. They moved into packaging a little bit like Caxton did, and that's provided another line for them. It's very much specialist packaging, labeling, etc., for the big consumer brands. But it was taken over a couple of years ago by A2 Capital, which is Andre van der Veen, ex-HCR. And I've got another HCR person here, different to Marcel Golding and Rex Trueform. But he's also transformed the business. And there's been one interesting acquisition they've done, and that's the old Pearson education business. When the Pearson business in the UK started breaking up, they sold Pearson Education and Novus bought it. They've renamed it Maskew Miller Learning, which is, I think, a smart idea. Maskew Miller, all of us who suffered through school will remember Maskew Miller very well, that name on all your textbooks. But it's not a textbook business. It's got a lot more application that, yes, it is. It's going to probably get big contracts, but it's got an online version as well, and online learning will increasingly come into the fold. So this is starting to look more and more like a private education business. I mean, the last set of results, the operating income, I think was about 100 million from the education side, and about combined 73 million from the packaging and printing. So it's already by far the biggest. And knowing the characters involved with Novus now, I wouldn't be surprised they continue to add onto the private education business and build that out.
I'm also keen just to understand when we look at a company like Novus, and even the prospects for growth here. We have spoken about, of course, it becoming a private education group, but could they do more? I'm just wondering also from existing assets here. EdTech comes to mind. I think maybe from FinTech, from HomeChoice here, a really low-hanging fruit that a company like this can easily move into.
Yeah, look, they've got a very decent balance sheet. So yes, opportunities can be sought. I just think with this deal, it's a sizable deal. I think they paid, I'm not mistaken, over almost it's over 800 million. And they've got a market cap of about 1.4. So it's a big acquisition in their lives. So I think they let this settle down, maybe bolt on a little bit and build up before they look at anything new. I think there's pretty much a lot of low-hanging fruit in the existing business. But yes, I think over time they will look and expand out, most definitely.
Small caps are actually, medium caps are actually very exciting, Marc, and I think we might actually, kind of forget about them because these are very interesting businesses. I'm keen to get your thoughts from a retail investor perspective, how you would weight these, how you'd rate them, if somebody would like to buy any of them.
Okay, so just full disclosure, I'm a small shareholder in HomeChoice, okay. So I do like that. I like that it's, it's probably more risky than others, I'd say, but I like the story. Novus I just like the characters involved there. I think they're very smart guys, and I think they will do very well with the new assets. And then Rex Trueform is very much a long-term player. I think things will fold out slowly there. There's certainly a lot of value. I mean, you're buying at less than net asset value, tangible net asset value for basically a retail business because that's the main constituent. So it's not an expensive business, but you're going to have to wait a while before something unfolds there properly.
And then keen to get into our educational segment today. Marc, one we don't hear of often, shark watchers.
But I hadn't heard this expression until someone mentioned it in a comment to me. I thought, what is he talking about? So yes, it's actually very applicable to the JSE because we, especially if you follow certain people on social media, look for the takeover targets, look for the next deal, look for the next delisting. So shark watchers, we're watching volumes, watching spikes in share prices, paying close attention to, let's call it the shimmying in the water and what's happening. So something like Bell Equipment, you'll have a lot of shark watchers there because things are happening there at the moment, as you probably know. There's a lot of speculation. So it's an interesting term, which is just basically looking for it's the predators looking for the next big feed.
Well, Marc, always fun speaking to you. Thank you so much for joining us on Stock Picks this afternoon. That was Financial Mail's Marc Hassenfus.